Welcome to the XFO Intelligence podcast. For 3 decades, private markets operated on a simple, unspoken bargain. You accepted illiquidity and high fees in exchange for access to scarce, exclusive deals. If you had the right network, you had an edge. But that world is gone. We have crossed a structural threshold into the synthetic world. Today, AI generates thousands of polished pitch decks daily. Tokenized derivatives democratize private market beta, and the signal-to-noise ratio has approached 0. The velvet rope has dissolved. This isn't a cyclical downturn, it's a fundamental phase transition. The traditional sources of alpha, access, illiquidity, and information asymmetry, are collapsing under the weight of infinite supply. And the most dangerous part? The synthetic world creates what we call the toxic bloom. The market looks incredibly efficient and lucrative right up until the moment these synthetic, unverified deals mature and fail simultaneously. It's not a slow bleed, it's a sudden systemic cliff. So, where does asymmetric alpha live when everything is infinite? It lives where algorithms cannot go. We see 4 clear vectors for the future. First, proof of reality. When digital artifacts are infinitely abundant and easily faked, verifying physical reality becomes a massive economic moat. The firms that will dominate are those using physical audits, IoT verification, and cryptographic provenance to sell certainty in a zero-trust environment. Second, the relational moat. AI cannot negotiate a complex debt restructuring at 2 a.m., nor can it build the deep biological trust required for generational family business transitions. Human trust is now the ultimate unhackable moat. Third, physical-digital arbitrage. When retail capital floods into synthetic, tokenized private credit, driving yields down, astute managers can originate the actual underlying physical loan at a much higher, unarbitraged yield, capturing the liquidity illusion premium. Fourth, thermodynamic infrastructure. The synthetic world is entirely parasitic on the physical world. Don't just invest in the AI, invest in the localized power grids, cooling infrastructure, and legal wrappers that make the synthetic world function. They are the toll collectors of the new economy. This demands a radical shift in portfolio construction, the Barbell Strategy. On one end, hold highly liquid synthetic instruments for cash management and tactical yield. On the other end, allocate heavily to deeply illiquid, physically verifiable, relationship-sourced assets. But you must ruthlessly avoid the middle. Standard, vanilla private equity and generic venture capital are where the noise is highest and where the toxic bloom will do its most damage. The transition to the synthetic world is not a technological shift, it is an epistemological one. The alpha of the future belongs to those who can establish epistemic certainty, leverage human trust, and control physical constraints. If you found this insight valuable, please like, share, and subscribe to the XFO Intelligence podcast. To dive deeper and connect with forward-thinking investors, we invite you to join the XFO-Connect community. For registration details, simply email us at xfointelligence@gmail.com. Disclaimer. The content of this podcast is for informational and educational purposes only and does not constitute financial, investment, or legal advice. All investments carry risk, including the potential loss of principal. Past performance is not indicative of future results. Always conduct your own independent due diligence or consult a qualified financial advisor before making any investment decisions.